one thing, I think our clients are not aware of is when, they have an agreement, say they're going to maintain a car together and pay it off, like I was referencing earlier, that even if we say, so in some cases, let's say they say they're going to contribute to the debt and pay it. That's one thing. But where maybe a card is in both their names, and in the settlement agreement, we say, petitioner, or, wife or husband's going to keep all that debt, even though it's in both their names. One thing I have to explain is, like on a title of a home, or on the loan on a home, keep in mind that you may have a settlement agreement that says you are responsible for this debt. That only applies as far as family court, orders. It doesn't. You can't send that court order to the credit card company and say, I'm off the hook if it defaults because you signed an agreement.
Yeah. So to your point, when I was doing mortgages, if the husband and wife were on the loan, and in the agreement they said, you know what, the wife's going to stay in the house and she's responsible for the mortgage payment, but they don't want to refinance it because the rate was really low, so he's going to stay on the loan. If he wants to go buy a new house, that loan is still on his credit, so she has to prove, he has to prove, they have to prove that she's making those payments. So we needed, like, back in the day when I was there, I'm not sure what the guidelines are now, but we needed to have like 1 year's worth of canceled checks showing that the money was coming out of her account and that she was responsible for it, to take that debt off of his, debt, even though he's technically on that loan.
So there are ways around that if people get stuck with that. Because we've had people say, husband or wife will have 1, 2, 5 years, whatever the case is, to get in a financial position to be able to refinance the house and remove, the spouse off the mortgage through a refinance. And where if that doesn't happen, or it's not possible, or even during that time, they're going to run into that problem where it's still going to be reflective on their report, on their credit report.
Right. Yeah. And like I said, if he wants to go buy a house, assuming she's the one that stays, and he wants to go buy a new house, he's got to qualify for both payments or show that she's making those payments. And that's where it gets a little bit tricky. And that gets a little bit trickier when it's a recent divorce, because there isn't the history of her paying.
Right. Now it makes sense.